Corporation of India, along with its sister organizations, Payments Council of India and Fintech Convergence Council and National Payments Corporation of India. Ladies and gentlemen, the fest is presented by the Ministry of Electronics and Information Technology, Government of India, and supported by Niti Aayog, Startup India, and Invest India. And it is presented by NPCI, powered by Razorpay, brought to you by Amazon Pay and WhatsApp, in association with Google Pay and Open Financial Technologies, and our digital payments partner is Cash Free Payments. The second edition of the summit, with the theme Fintech, Empowering a Global Digital Economy, will provide an in-depth understanding of the latest business, policy, investment, and technology developments within the fintech landscape globally. Once again, we welcome you all for the keynote session on future of payments with digital cash. Without further ado, let me introduce you to our session host, Mr. Naveen Surya, Chairman, Fintech Convergence Council and Chairman, Emeritus Payments Council of India. Excuse me. Also, it's a pleasure to introduce Professor Franklin Noll, President Noll Historical Consulting LLC. Delegates, you may also put your questions on the chat window and we will try to respond to them at the end of this session. Over to you, Mr. Surya.
Thank you, Kathy. I think without taking further time, I would request Professor Noll to take us through his presentation on the subject. Professor, over to you.
All right, it's a pleasure to be here, and thank you for inviting me. And what I'm basically going to talk about is kind of the reverse of what's been going on for the past few years. With crypto, we're talking a lot about digitizing stuff, and maybe we need to think about it the other way. Do we need to take crypto and make it analog? And this might solve a bunch of problems. So let's talk about the future of payments very quickly. As everyone knows, we are moving from a cash basis to a crypto, or at least a digital basis. And so we are changing technologies, monetary technologies. Now, cash has been around a long time, and it will probably be around for another, probably a generation, would be my guess. And so how are we going to move from this cash world into this crypto digital world that we see before us? And what I would argue is that we need a transitional device, something that combines the best attributes of cash and of the digital world. So why is cash around yet? With all our phones and digital platforms, you'd think we'd make the transition by now. We'd all be like Sweden. But cash is around for a reason. One is it's a very robust technology. You can use it anywhere, time. It's accepted around the world. People know how to use it. They know how to safe keep it. And you don't need electricity. You don't need a phone. You don't need any electronic aptitude to do it. And because it's actually physical and tactile, a lot of people find it comforting, if not just familiar. But, there are downsides to it, as we all know about, including, it gets lost, it's costly to handle, can get robbed. But we all want to move to a slightly different world where things move much easier. The problem with cash is it impedes a lot of things. It makes remittances expensive, as we all know. With cash, you can't have smart money or programmable money. You have to worry about stuff like zero lower bounds in monetary policy. You can't do any new or advanced monetary or fiscal policy. So what I suggest is we move to something that's a hybrid, something that takes the best of cash and the best of digital and puts them together in a familiar platform. Now, a brief definition of a hybrid banknote is what I'm talking about. It's not a card, it is denominated, and it acts just as cash does now. You can pass it hand to hand, use it for purchases, put it into vending machines, etc. But with a hybrid banknote, you'll be able to take that note and transfer its value over an electronic network. So you could actually back it with a CBDC, a stablecoin, or even Bitcoin, as some people are getting around to it. But this is not a really new idea. It's not all that new. It's been around almost since Bitcoin. And I'll go into a quick history. The first ideas about a let's call it a hybrid banknote, and I'll talk about what you could call a smart banknote. Now, a smart banknote has a chip in it, and usually it's considered you would use it would be RFID, and you could just read a chip. And this idea first arose in 1996 is the first patent I see for it. And back then, and for a number of years, people were just thinking about, let's put a chip in a traditional banknote, and that can be an anti-counterfeiting device. It can provide more information than's on the surface of the note, and we can check it against, the surface of the note and see if it's actually legit. This idea kicked around in the early 2000s. In 2001, the European Central Bank, the Bank of Japan, thought about this, seriously thought about doing it, but chips were big, they were expensive. In 2008, Hitachi invented RFID powder, so it's chips only a few microns apart or big, and it would be easier to put it in the substrate of a note, and the idea kicked around a bit longer. Now, the first time that anybody thought about using a smart banknote with a chip to transfer value was in 2010, and Ignacio Mas, who's pictured here, was part of the Gates Foundation, and he was interested in financial inclusion, and he thought, how can we make cash better, cheaper to handle, and be able to allow people to enter the digital age? And he hired Consult Hyperion, David Birch's firm, to come and look at this while at the Gates Foundation. And they came up with several ideas. If you put a chip in a note, you could turn that note on and off, or activate and deactivate, as they said. And if it was activated, the note had its value in it. If it was deactivated, it did not have its value in it. So you could ship deactivated notes around, saving costs of security. Somebody in a village with spotty internet or spotty electricity could still use this banknote as a regular banknote, but then go to a kiosk or some other point and transfer the value electronically for a remittance or to make a payment. And here's a slide from a presentation by Consult Hyperion. And they thought more in terms of using a card, but again, it's denominated. And they said, once you put a chip in, you really don't need a banknote platform. You can make it whatever you want, whatever shape you want. And they coined the term smart banknote. Paul Macon did. But they saw the problem that would arise with putting a chip in a note. One, you can hack the chip. Second, you'll get a lot of pushback from the cash industry because it's now a card. It's not going to work in the same way that a banknote does in vending machines, in processing equipment, in reading equipment. So this idea really did not catch on until very recently. There is a firm developing a chipped banknote that's going to be backed by Bitcoin, and that's still in development. But there's another way you could go, and this also arose around 2010, 2011, and this is what I would call a crypto banknote, and this is a term invented by Andrei Lipkin, who I'll talk about later. But in 2011, if you see the picture on the right, BitBills arose. And I don't know if these were ever issued or not, but it was the idea that basically you could take a paper wallet that was attached to Bitcoin, put a denominator on it, and start passing it hand to hand. Let's say you create a paper wallet that goes to a wallet that has exactly 1 Bitcoin in it. You could take this wallet, put 1 Bitcoin on it, and pass it hand to hand. And you could kind of use it like cash. And it works in the way that on the bit bill or any kind of crypto banknote, you have a public key and a QR code, and you have a private key, usually in a QR code that's hidden under a scratch-off protective coating. And the idea was, if you want to access the value in the crypto banknote, you would read the public key, scratch off the covering on the private key, read that, and then you could access that value and transfer it or do whatever you wanted with it. On the left, there was a different variation called Banknotes, which arose in 2016, and I don't think this ever went beyond the model stage. And here you could print the banknotes at home and add an extra QR code for security. So the idea has been around a while, and it's still pretty viable. If we could move forward in time, if you look on the right, there is a note by Bitcoin Suisse out of Switzerland, and this was their original series of, I guess they called them Bitcoin notes at the time. But you can see there's a QR code on the left side, and there's a little box that says private key. You would have to remove that box or take the note apart to access the private key, and then you could transfer the value. This idea was built upon by Andrei Lipkin, who you see pictured here, and in 2017 he came up with the idea of a crypto banknote, but you would use, again, a foil cover and a QR public key, but it would be a traditional banknote with all the security built into it, and it would run on polymer or paper just like your notes are today. And so this has moved forward, and in 2019, Bitcoin Suisse put out a new series of notes that are based on Bitcoin, Ethereum, and some other cryptos, and they look almost like traditional banknotes. They have a lot of the security features in them: holograms, UV strips, OVD inks, things like that. So this idea has been kicking around for at least a decade now. So there must be something to it. You having a hybrid banknote, a note that will pass hand to hand, but then you can connect it to a network and transfer the value. And so briefly, why does this have such a long life? One, as I talked about, is financial inclusion. If you have somebody who's basically on a cash economy, if they have a hybrid banknote, when they want to, they could access a digital network and move money around. And another one, what if you don't have internet access, or you have spotty access, or even you have spotty electricity? Moving into crypto is kind of hard with that. But if you have something that would connect once in a while and all the other time you could just pass it like a regular note, that might be more useful. And if you're in a disaster area, regular cash works best, but if there are points where you can move that money around on a network, that works best. Also, the cash industry, if you went purely to crypto, you would disintermediate the entire cash industry, which is pretty huge. The people who move money around, who print it, who process it, it's a big industry. So going against that is not the greatest idea. Popular payment practices. People are used to cash. A lot of people don't want to deal with crypto or even digital money. They don't want to pay bills on their phone or on their computer. They want cash. And as we have seen during COVID, there was an increase in cash usage, or at least cash production. Most of that cash may have gone into storage as a safe haven or something like that, but cash is still around and they're producing more of it than they were before. Digital money adoption, if you introduce a hybrid banknote, people will get used to the idea that, you can move money around digitally, and cash is just one form of that. Central bank policy, again, with cash in place, traditional cash, you have the zero lower bound in interest rates, which you can't break through. With a hybrid note, you can adjust the value of that note from the central bank. Security, with an extra chip, you can put more information about the note. Transactions are anonymous as long as you're using it as cash. Once you connect it to a network, it will report into the ledger what transaction occurred when you're doing that. But if you pass it hand to hand, you'll never go onto the blockchain. Carbon reduction, say you create a note that is backed by a crypto, works on proof of work. You can lock that value into a note that passes hand to hand and is used in payments, and it only connects to the blockchain once in a while. So you do not have to do that mining except once in a while for a payment, not all the time. Okay, I'll quickly go over some use cases or models, let's say. Let's say we start with a banknote, a smart banknote that has a chip in it. Here's the recent $10 bill. And if you look at this symbol, it's a symbol of liberty. It's the flame from the Statue of Liberty. And this will be our icon, which I'll come back to. Let's say you have a smart banknote that has a chip in it. You may or may not see the chip because it's so small. But you'll know that there's value in the note because this Statue of Liberty icon is red and it's raised above the surface of the note. If you take this note, maybe put it to your phone and transfer the value out, that icon will disappear. It will be clear and it will no longer be raised above the note. So this is a visual and a tactile signal that the value of this note has been moved off. With a smart banknote, you can move the value back on again. Say you have a blank note or a deactivated note. You touch it to your phone. You can transfer money from your digital account back into the note. The icon lights up and it raises above the surface and you can go about your business. So it's a reusable note. If you're talking about a crypto note, which is one form of a crypto banknote, and here you have examples of a public key and a QR code, and on the right there'll be a foil covering where the private key is. Again, you can pass these hand to hand, use them in vending machines, whatever you want. But when you want to transfer the value over a network, you have to scratch off the cover to access the private key, and you'll read both keys in, transfer the value, but then this note is basically burned. It's no good anymore. And anybody will be able to tell because of the covering being destroyed. There's another idea, which is a crypto bill, which is slightly different. It does not have a private key on it. It only has a public key on it. And here you can see two mock-ups, and you just insert a QR code for the public key. Now, if you want to transfer value, you have to go to a bank or a representative, and the issuer will have the private key. So you'll take your $100 into, say, a branch of the bank or to a postal bank and say, I want to transfer this value over the network to this email address. And they'll say, sure. They'll scan in your public key, access the right private key, send the money out, and they will hold on to this note, which is now kind of emptied. But they can take the note, reassign it a new private key, and then issue it again. In the United States, the model for this is a silver certificate or a gold certificate, which are no longer issued by the U.S. Treasury, but the same idea applies. say with a silver certificate in the US, it was backed by silver, so you could take it to the bank, say I want $1 worth of silver, you'd get a silver dollar coin, and the bank would take the note, it would be processed and reissued because there's still silver in the treasury vaults that it can be backed against. So in this case, a crypto bill would basically be a certificate of deposit for a CBDC, a stable coin, or some other crypto. So that was a very quick overview of how you could take something very traditional, add some new digital elements to it, and make it a hybrid and a transitional item that could move us from cash and 19th century technology into crypto, a 21st century technology. And that was my quick presentation, and I'm glad to take questions from anyone.
No, that's really amazing. In fact, first time when I heard this over some of our conversation, internet world, I found it very fascinating because I also believe that instead of fighting cash, if we adopt the benefits of cash and make it smart, like you proposed, that probably can win us this game. I have a couple of questions from audience, but I have personally two questions. We go into that.
Sure.
When we use this, right, one of the big issue with the physical cash today is the cash cost of the physical cash, the printing and the storage. So it's not just the printing, but also storage, handling, logistics, security. In this case, by adding technology, you're even increasing it. So how do you kind of justify that extra cost and benefits?
The additional cost of making a hybrid varies, and it depends on what form you take, and a lot of the backroom stuff will affect the cost. For example, a crypto bill here would basically run on the current presses using current techniques. All you're doing is adding a QR code to it. So the cost is not that much increased. But again, also cash is kind of a public service. If you just, let's say, start to eliminate cash and just have CBDCs, how many people are going to take advantage of that? Are you going to distribute smartphones to people so that they can access a CBDC? Are you going to do the public education campaign and everything else that's involved in making the transition? If you're going to issue a CBDC, are you going to move to some other kind of hardware device, say a card like old Mondex or like WhisperCash, or kind of like the Bank of Japan is looking at? There are costs involved anyway. So do you want to jump to a new technology that will be in people's hands and bear that cost, or do you want to use a more traditional platform where people know the costs and people know how to use it? And some people may never want to access the network, and they just want to use cash as cash, and that's it.
So your point is that if it's a low value, then you're just adding a QR printing cost, and then it's not much. Unless it's a high value and a high reuse, then only you go to the larger, smarter solutions. There's a question linked to this QR code. I think while you explained it, probably you might have to re-explain it. That it's from Pratik of NPCI. That when you have a QR code on the phone, how do you make sure that it's not reuse or double spending? I think you explained it. You might have to re-explain that thing very quickly.
A lot of what would happen depends on how the software is designed, how the underlying ledger is designed. There's a whole lot that would have to happen in the background, and making sure you don't have a double spend problem. That is back on the ledger side of what's happening, and you won't really be able to tell from the note, other than in some forms of a hybrid banknote, it'll indicate whether that note has been used or not. So I really can't give a definitive answer to that. It's really a lot of stuff that needs to be developed.
But you're
And
saying the solution does exist, right? So if you apply those principles and solutions, then you could eliminate this problem.
yes, or yeah, there ways have been thought through to avoid the double spend problem, and how either to be able to use right now the Bitcoin banknote that's being developed is being rigged up to run through an app on a phone. But you could certainly use point of sale devices or ATMs to transfer value around. So it depends on what technology you're using, um, as well as what DLT you're using, or you could even use a centralized ledger, um,
Yeah.
depending on what you're doing.
So is it right to say that you're trying to say that instead of keeping physical cash dumb and separate and creating a sophisticated product like CBDC, create a bridge in between and make them fungible into each other, make the physical money smarter so it can work in digital environment. At the same time, give people options, those who don't understand everything digital, continue to have advantages of physical. So are you saying it will be fungible the way the model you're conceiving or kind of projecting, that whether it's a physical currency, if it's a smart note like this, or a bank or a crypto note, with the CBDC or with the crypto, depending on what the government and the regulatory system allows?
Uh, yes. You would They would work together, and people could opt for what option they want. If you are happy doing everything on apps on your phone and you want to handle the CBDC that way, that's awesome. But for a lot of people, especially older generations, they won't be so thrilled about that idea, and they won't think, that CBDCs are real, because they can't hold it, they can't touch it. But if they can use their traditional banknotes, and the only difference that they see is that maybe it has a QR code on it now, they can go about their business as they like. And for those people who want to enter the digital world, but for some reason they are unbanked, or they have problems with access to electricity or the internet, they can use the notes once in a while as they are able to get to a device that will allow them to do this. Um, so, so trying to combine the two technologies together so that they both work better.
Very interesting. So one more quick question. I think we've been hearing CBDC as a big thing, especially driving from again China and few more countries to it. For US, we always keep hearing this mixed reaction that do they really need to do it, not do it? Will they do it, not do it? What's your personal views? Do it, not do it? Should they do it? What's your views?
I think the U.S. or basically any country has a lot to gain from the flexibility that a CBDC would give them in terms of policy. Like I said, you can go to a negative interest rate if you have a CBDC and no cash to block that lower bound. And of course, if you start introducing smart contracts into it, you can do all kinds of great things. Now, as I'm sure the viewers and the participants here know, the Fed is being very quiet and, as you say, not exactly clear about what they're doing. They are working with MIT in development. That's about all they're saying. And you're hearing a lot of things from Fed governors. We don't really need this. What's a good use case for this? If we have FedWire and SWIFT and, ACH, why do we need this thing? We're doing perfectly well as it is. And with the SWIFT network, we can control, have a soft foreign policy control against the rest of the world. A CBDC isn't going to give us, any big perks here. And right now, my guess, and this is a total guess, is that a lot of the administration, the Fed and Treasury, are more worried about regulating stablecoins and other crypto and DeFi than they are worried about developing a US CBDC. And you'll hear a lot more in the headlines about such things. And so they're probably going to spend their time worrying about these other fields before they start worrying about a CBDC when, basically the U.S. is such a dominant force in payments already. Why mess with something that works?
So one last question from one of the audience participants, saying that can you recommend some of the books related to the subject?
I didn't hear you. You broke up a bit.
So one of the audience, John, he's asking that can you recommend some of the books from yourself related to the subject?
I'm sorry, but no books have been written on this subject. I am the one writing this stuff. I have one or two papers that I wrote. I wrote a paper for the Bank of Canada, and that is available on my website, or if you start searching in ResearchGate, and you can. There's a page on my website right now that has all the papers that have been written on smart banknotes and hybrid banknotes. So go to franklinnoll.com and look around, and you should track it down. If not, Google me and you'll find something.
Thank you. I think we're just about the time, just 1 minute. I really appreciate you taking time out and spending time sharing this interesting idea with us. I think from an inclusion perspective, this is one idea that every country must explore and find a way to bridge the advanced technology with the traditional physical ones. Thank you.
All right. Thank you very much. It was great.
Thank you. Thank you so much, Professor Noll, for spending this time here with us at Global FinTech Fest. And thank you, Mr. Surya, for moderating this session. Thank you very much for the gentlemen here. And to all our delegates, stay tuned because this is just day one of the Global FinTech Fest 2021. We have 2 more days to go and many interesting sessions coming up for you. We have 450 speakers from 40 countries, and we are so glad to have over 20,000 delegates who have registered with us for the Global FinTech Fest 2021. This is me, Khyati Kawair, who's signing off from today's day. I hope to see you all tomorrow. Thank you very much and have a very good evening.